I believe we could be seeing the downfall of the huge American tech giants in 2026 alongside a modest Nasdaq correction. So in this video, we're gonna discuss in detail where exactly our price targets are for this upcoming downfall for Tesla, NVIDIA, and we will see why Oracle is a cautionary tale and a harbinger of what is to come for those companies and many like them. Hello and welcome to another video by HKCM Global. My name is Joe, and yes, we are talking about the downfall of the American tech giants, namely NVIDIA and Tesla, right here in this video. And you know, last week I actually wanted already to do a video about NVIDIA, namely around the news that the Chinese government has blocked the import of NVIDIA H200 chips towards China. So remember, the United States already restricted the sales of NVIDIA chips towards China. However, the H200 platform was still allowed. And then China on their end said, no, we will not take those chips anymore, which of course meant the complete breakdown of the Chinese business side for NVIDIA. However, that was last week. This week, I'm waking up to these headlines here. Reuters reports out of exclusive sources that China gives nod to ByteDance, Alibaba and Tencent to buy NVIDIA's H200 chips. So what exactly are we talking about? China approves the import of over 400,000 H200 chips by NVIDIA. And remember, those H200 chips are not small microprocessors, those are huge GPU units, and we're talking about $35,000 roughly per piece. So altogether around $15 billion, I do believe, for those over 400 chips. And that is only one first stage. So of course, altogether, that is actually good news for NVIDIA. Our outlook, however, is not that good at all. But what this story also shows you is how quickly macro narratives and news narratives around those companies can change nowadays. Like it or not, the world is changing and we do not live in a society and in an economy as stable as it used to be a couple of years ago. And so our short-term outlook here for NVIDIA, probably not the most interesting thing, because our mid to long-term outlook is way more interesting. However, still want to discuss it here real quick with you. So starting here out of the wave 4 low, which we saw for NVIDIA in April of 2025, together with our picture perfect hit of the target zone here. So great gains were made in the process here for NVIDIA. So ever since this low then here, we have so far seen here in Roman candles in beige a 1, 2, 3 rather extended wave 3, and we are right now in the finishing of the wave 4 corrective mode before we race off to final highs in the wave 1 to be completed here roughly in the area between $240 $250 potentially. And as you can see here, I do have the exact extensions here. However, exact price levels are reserved for our paying subscribers because this is an imminent target zone. And bear with me, I do have exact target zones here for you in this video, all for free altogether. But this is an imminent target zone, so this has to be reserved for our paying subscribers. Link down there in the description if you are interested. 200 markets on a daily basis, push notifications, full portfolio management, you got the whole package. So what do we see then from this point onward? That's the interesting part that I kept teasing you about. And for this we go here on the day chart, because out of this target zone here between the 100 and 123.6 extension, we do see a large correction coming in for NVIDIA. And we're talking about top to bottom, roughly. We will bring target zones on this chart in due time as soon as we see the exact price levels for the topping out for the wave 1. But roughly we're talking about 50% at least to 60-65% potentially from the levels that we see for the wave 1 top as coming in. This is our clear primary scenario. However, we do have an alternative scenario as well. So in the alternative scenario, we could already have seen the wave 1 high here back in October of 2025. So far, only a 33% probability. And in this alternative scenario, we would not be marching off to new highs, but we would directly fall through into this long-term entry area between $92 on the upper boundary and $39.50 roughly here on the lower threshold. But this is then only the alternative scenario. And yes, believe me, I can see the comments already. Wow, another crash prophet. He's talking trash. NVIDIA is making great create gains. NVIDIA is an amazing company. They aren't even that expensive. And yes, I got you. I hear you. I'm with you. However, please do remember, NVIDIA right now is hugely profitable. We have barely ever seen a company of that scale being as profitable as NVIDIA, and that is exactly where the problem lies. So if we jump over here, for example, to companies' market cap, we can see NVIDIA revenue for 2025, right? 190 billion, give or take. Earnings, 116 freaking billion. I don't know how much attention you paid in math class, but this is an over 50% profit margin on their chips. Dependent on the source, we're talking around 55 to 60% profit margins on their products. Are you kidding me? This is a global company and they're pulling 60% profit margins. This is not sustainable. NVIDIA, amazing company, right? Fueled by the AI hype. Sure, those prices are pushed because their product is superior, but it is a question how long they can keep up this superiority and therefore keep up their pricing power. And this has to be seen. And therefore those profit margins cannot be considered a given in the future whatsoever. And might I remind you, sure, this is a bold call. 60% correction coming in NVIDIA, that is a bold call. But might I remind you, we have seen this playbook already, and we have seen it just in the last couple of months, and we continue to see it unfolding as we go and as we speak. Oracle, back in the summer of 2025, so only 8 months ago, bottom to top in just a matter of 4 months total, 189%, so roughly 200% in 4 to 5 months for Oracle. And what happened after? A violent sell-off, still ongoing, top to bottom to current point in time, 50% down already in, again, just 4 months. So if we extrapolate that another month in the future, we would probably see a complete wipe out of every single gain that we have been making back in 2025, bottom to top. And the story is somewhat different. Huge AI hype, huge run. Oracle, one of the leaders in AI infrastructure, huge contract here, huge contract there. And then it became more and more obvious that Oracle was not able to keep up their pricing power. Oracle had way more costs than they had initially anticipated for their project, and so profit margins fell and therefore stock price collapsed. And may I maybe pull the NVIDIA chart here for you as just a quick illustration on how quickly this can go. I mean, look at this. What did I tell you? You can see these very same movements here in NVIDIA alongside with Oracle. So NVIDIA and Oracle, first peak here, we got the correction here, we got this next run, and we got the run to follow. We got the very same correction here, and then we got the violent race to the final top. And yes, sure, admittingly, the moves altogether are the exact same. However, Oracle topped out earlier, and NVIDIA, so coming out of 2019, for example, up until this point in time, in late 2025, it was the exact same playbook altogether for NVIDIA as well as with Oracle. Only difference, only divergence starts here in late 2025, where Oracle just completely collapsed and NVIDIA just maintained these price levels for a little longer. But who is to say that Oracle is not just a harbinger of what is to come for NVIDIA? I'm telling you it is. And to bring then a bit more detail in this foresight, and because we're also talking about Oracle, not just NVIDIA and Tesla, which is the very next one here, we have exact price targets for the finalization of this wave, a corrective wave here. And again here, it is an imminent target zone, therefore I cannot share exact price levels with you. However, we're talking here about the 61.8 fib retracement up until the 78.6 fib retracement. So roughly from current point in time and the current low point in time, another 18, 20%, 25% roughly until the optimum target here inside our target zone. So if you're looking to go long Oracle and make use of this expected counter rally in the still ongoing correction to finish later on in time, this might be a good idea. But again, no investment advice. That's all on you. Except, of course, if you are a paying subscriber and make use of our full portfolio management. But anyways, back to Tesla. And with Tesla, I gotta admit, I am a huge fan of Elon Musk. I do believe he is the greatest entrepreneur of our time. And the story of Tesla has been a story of great success over the last years. However, it was a story fueled by growth and by expectations of the future and by expectations of Tesla being the greatest EV manufacturer of the world. And this narrative is slowly collapsing. And I have brought concerning numbers here for you. So you can see this very same story of growth and of expectation. 2017, right? Tesla sold globally, global sales of Tesla EV vehicles, 100,000. 2018, 250,000. 2019, 370,000, 500,000. 1 million in 2021, 1.3 million in 2022, and we then already hit the pinnacle in 2023 at 1.81 million cars globally, which is not that much. However, we're talking about a growth story, right? But that growth story is collapsing. 2024, 1.79 million. So not a collapse, rather a stagnation. 2026, and please forgive me for not having the fully up-to-date chart here, but I do have the numbers. 2025, altogether global sales down another 8.5% to 1,650,000. So not a stagnation, but a real coming down in global numbers. So almost 10% lesser vehicles sold. And we're not talking about profit margins yet, because profit altogether in 2025 for Tesla fell a staggering 46% down to only $3.8 billion. And that is on top of already declining sales numbers. So in 2025, Tesla pulled in only half the earnings that they did in 2024. And now Tesla really is under pressure to make their full transition from great EV manufacturer to full robotics world empire. At least that is the story now. But anyway, so with those numbers, looking at the Tesla chart, our current expectation of a huge wave 2 correction coming in, and we're talking again here, just rough estimates. We do not have exact target zones on the chart yet, but rough estimates being 44 to maybe potentially even 50% down in stock price for Tesla. And I mean, we're talking about Tesla. We have seen those swings in a matter of weeks in the past. And if I'm just telling you that earnings are down 50% for Tesla year over year, this might maybe not even come as a shocker to you. And long term, yes, long term I am still hugely bullish for Tesla, and I'm definitely looking into scaling up my Tesla position if we are to hit those levels around $300. But in the meantime, we have seen out of this wave 3 low here in April again of 2025, a 1, 2, 3, 4 so far completed, and a wave 5 currently still in the making. Again here a target zone which was slightly overshot to the downside, so invalidated. But if you had not worked with a stop loss here directly at the lower boundary of our target zone, still you're in the trade and you are up for a treat if we are to finish this wave 5 and therefore the wave 1 top here in the area of roughly 550. And the then before mentioned long-term outlook, where I'm again hugely bullish for Tesla. If we are to hit those levels, again here roughly around $300, exact target zones will follow for paying subscribers as soon as we can estimate them based on the wave 1 pivot point, which is not yet established. But let's just for good measure take this 300 level roughly, give or take, right? So only in the next move to finish up this wave 3 high here in blue, to follow this wave 2 low that we just discussed in April of 2025. So the direct continuation here then of this bullish trend coming out of 2019. We've seen the wave 1 top in October of 2021. We have now seen the wave 2 low here in April of 2025 in a truncation. So the wave 2 low here was not able to establish another lower low here, but established a little higher low. But still structurally, this is the end of the wave 2 corrective wave. And so up until the wave 3 top here, if we start from roughly this $300 level, we will be talking about another 200% potentially, all the way if we manage to hit the upper extension of our target zone for the wave 3, we'll be talking 250% for Tesla. So delicious gains to be made. And I do believe in this great macro story of Tesla being the robotic world empire. But that's a story for another day. So tell me what you think about that macro story of Tesla. Tell me what you think about the incoming downfall of the US tech giants in 2026. I'd be hugely interested in hearing your opinion. And so see you in the next one. Take care.